So let's go into LLCs, and then I'm going to move into the S-Corp because I know you wanted to talk about S-Corp, right?
Yeah. And so the main gist of the S-Corp really flows from knowing the difference between income tax and payroll tax. And so if we can establish that concept first, I think will help your audience, understand why the S corporation is such a powerful potential tax saving tool.
Yeah.
So let's ask you this. Number one, when do you know when you need to convert to an S corp? Because okay, let me ask you this question first,
Right.
and then we'll go into the S corp.
Yeah.
Most entrepreneurs think that forming an LLC solves their tax problems.
Right.
It doesn't.
No. So first of all, as far as the IRS is concerned, an LLC is meaningless. The IRS does not recognize an LLC as its own thing on its merits, right? And now it does recognize what an LLC is, but an LLC is a state level of organization, right?
Yeah.
So every state manages their own LLC type of wrapper. So as far as the IRS is concerned, it's not that you have an LLC. The IRS is only concerned how you want that LLC taxed. Okay. And there's four main ways that you can tax an LLC. And this is how they're going to categorize your LLC. If you go and you create an LLC yourself and you don't have any partners, you don't put your spouse on there, you don't put a business partner, it's just your LLC in your name alone, and you don't make any other elections to the IRS, you default to what's called a disregarded entity. Meaning that is going to be treated as if you had no LLC to begin with. You are just going to be treated like you're an entrepreneur that pays on their normal individual income tax return. On an individual income tax return, when you're a sole proprietor, you're the only person in the business, you do everything yourself, you're self-employed, or a contractor, like you get your 1099 NECs, right? That flows through what's called Schedule C on your 1040, right? Anybody who's done TurboTax, that's, all of a sudden, as soon as you have that 1099 NEC, you're putting in, all of a sudden TurboTax goes, yes, because now I'm going to charge you $250 to do this tax return, right? You're self-employed. You want to upgrade to the self-employed portion, right? When they upgrade you to that self-employed portion, they are opening the Schedule C on that 1040. And that's where the income from a contractor job or that 1099 NEC flows through. Now, anybody can be self-employed. Accountants, you could be a small manufacturer. I mean, if it's just you and you never elect to be taxed differently, it's just going to be you're a sole proprietor in the eyes of the IRS. And that is probably the least tax efficient way to be an entrepreneur, right? Because all of that income that you make by default is going to be subject to self-employment taxes, right? And so even if you have employees, which you can as a sole proprietor, it's not, most people don't. Usually if you bring up employees, you organize yourself in a different way. But even if you have employees, you are 100% of your income is still subject to self-employment tax or payroll tax over and above what you've paid your employees. So that's really important distinction to know that LLC doesn't really mean anything until you make an election. So let's say, what are the elections are? So if it's just you and you're a one-man show, sole proprietor, disregarded entity. So the LLC, you just put the EIN on there and you're good to go. The second way is, let's say you form an LLC with a partner. It could be a spouse, it could be your kids, it could be
Can it be your dog?
Cannot be your dog.
Can't be an animal.
Cannot be an animal. No.
But you can leave. Can you put look? I've seen rich people.
I think there wasn't The Richest Cat in the World, like a 70s movie where a guy left all of his money to his cat. Yeah. And then I think there was,
it's not real, folks.
Famous comedian tried to kill the cat the whole time. I think the cat talked to. I remember it vaguely as well.
Yeah. So if cats can talk, they can.
I think we have a real interesting existential question if a cat starts talking.
Yeah.
Right? But let's say you form.
Some would beg to differ.
Yeah, let's say you form a partnership with another entity, a legal entity. I believe, at that point, two people in an LLC, owning an LLC, whether it be 1% and 99%, 50-50, if there's two people that have ownership, two or more people that have ownership in that LLC, and they do not make an election to the IRS, that is going to by default go to become a partnership tax return. And you are then taxed as a partnership. Now, partnership is taxed a little bit differently from a Schedule C, but you are still, in most cases with a partnership, if you're an active partner, and I want to make that distinction because everything I say almost has a caveat in the tax law, right? And so we could spend days going over all of the little carve-outs, but let's just, for general purposes, if you're an active entrepreneur and you're actively working in the business and you're in a partnership, that partnership income is going to be subject to self-employment tax, right? And this is what I want to emphasize the difference. So remember, we were talking about your income tax and it being around 24%.
Yeah.
Let's just, for sake of example, it's 24%. Self-employment tax is right around an additional 15%.
Wow.
Right. Yeah. Yeah. So what are we looking at? Not 39% is really what you're paying taxes on?
It's the government trying to keep the little man down. That's exactly what they're trying to do.
So the concept of it, on the face of it, sort of makes sense because it's basically what it is Social Security, Medicare,
Yeah.
right? When, everybody who's had a W-2 job goes, where did my paycheck go when they see their first paycheck? And it's usually not with federal income tax withholding. It's usually the FICA. It's Social Security and Medicare. And what people don't understand is they're paying about 7.5%. Again, before someone writes in and goes, well, actually, the number is, I'm just going to say, just to keep it simple, about 7.5% between those two Social Security and Medicare numbers is roughly 7.5%. That's what you're paying on your wages. Okay. But what people don't understand when you're an employee,
which I know it well because we've been over this now.
Yes, exactly.
Paying every
right. But you have employees, right? So what you realize, but when people who are starting their own business don't realize is that while they're paying roughly 7.5% to the government for Social Security and Medicare, their employer is actually kicking in and matching that. They're paying in 7.5%. So let's say an employer, let's say you give you hire
monthly.
Yeah. Oh yeah. No, I mean
monthly.
It's actually going to be every paycheck. I mean, some people have to pay it weekly or semi-weekly.
Yeah.
But let's assume you hire somebody for $100,000, just for a nice round number, $100,000, right? they see $100,000 for their salary, but what it actually costs you as the employer is $107,500 because you're paying them, and then you're paying half of their Social Security and Medicare. But nobody, you don't say, oh, my salary is $100,500.
Yeah.
Right. They don't think of it that way. They think, oh, I make $100,000 and then I have to pay, the income tax part of it, and then I have to pay Social Security and Medicare, but they're only paying half. Yeah. And so when you're self-employed, you are your own employer. You're paying both sides of that equation. Okay, so when you do that Schedule C, you make $100,000 on Schedule C. You're not paying, or you're not netting basically that 7.5%. You're paying the full 15%.
Yeah.
Now there's a caveat. I'm going to put this out here real quick. You do get to deduct from your income, like your income tax, half of that self-employment tax. So it does bring that 15% down a little bit in actual taxes you have to pay. But again, for the sake of just kind of getting the concepts, let's just table that part there. But I don't want anybody to think, well, you get to deduct half of it. Yes, you do, but it doesn't make a big impact because you really are paying that 15%, and then you get to turn around and deduct 7.5% for income tax purposes. Again, if your listeners can walk away with anything, it's knowing the distinction between income tax. That's what funds the military. That's all of the stuff that we pay the federal government for. And then there's Social Security and Medicare, basically,
Yeah.
right? And that's that 15% if you're self-employed, right? So how do we stop that? Because legally, depending on what entities we create, right, we can avoid paying that self-employment tax on all of our entrepreneurial income, right? And that's where the S corporation
Yes.
comes in handy. So before we get into the S corp, I just want to rattle off the last two.
Yeah.